Hey, good morning. Let's go over today's trade plan. So in the overnight session, we've seen the markets are fairly balanced and maintaining the upside move that we saw on Friday. Heading into the open, we have pre-market support at 77 quarter to 79 quarter, and holding above that area would tell us that buyers are still dominant, and it could be setting up for a breakout attempt above 81.75 to 83.75. It'll also be important to keep an eye on the Russell, which is also at a short-term inflection point, and if it can break out above this 51 to 53 half area, then it would support an upside move in the S&P as well. So right now, our short-term bias continues to be neutral. We are open to a move in either direction, but given the buying that took place on Friday, as long as the markets are holding above their aggressive areas of support, which in the S&P is 77 quarter, 79 quarter, then it could lead to a breakout attempt and a move up into 86.75 to 87.75 and 89.5 to 91.5, which marks the all-time high in the S&P. In the event of a failure at 77 quarter, 79 quarter, and in the event that we start seeing downside momentum off the open, it would tell us that sellers are stepping in at resistance, and at that point perhaps we're going to continue balancing within the recent range. So a failure at 77 quarter, 79 quarter would bring the 71.5 to 73 initial support zone into play, and potentially even 67 to 69, which is the breakout area from Friday, and then 64 quarter to 65.75 marks the low from Friday and also the launching point off of the non-farm payroll report. So in the event that the market fails at 77 quarter, 79 quarter, and it's now approaching these support zones below, we need to determine the intraday bias and figure out if there is sufficient reward to risk to make it worthwhile to enter long at initial support or at the zones below. So if we're selling off and the internals are quite bearish, in that case, there may not be enough risk reward to justify going long at 71.5 to 73. So that's something we'll have to assess in real time and see just the level of weakness that we are seeing in the market, because right now, up here at 81.75 to 83.75, this is essentially the recent 1 to 2 week high over here. So it can be seen as a short-term balance area high, and we need to see some clear strength in order to break out. So simply a lack of strength at 81.75 to 83.75 can lead to continued balancing. So if we are going to go higher, it's not simply enough to see a lack of weakness. We actually need to see all-out strength in the market. We need to see upside momentum, tick holding above zero, the AD line in positive territory and trending higher, and then the Russell also holding its breakout and then continuing higher. So we need to see that buying pressure continue in the market in order to see a breakout above 81.75 to 83.75, and then we can tag 86.75 to 87.75 and 89.5 to 91.5, and then we'll have to assess at that point how much strength and how much momentum are we seeing, and whether a breakout to new highs is really something that can happen today. It can certainly make an attempt, but given the recent ranges, given the type of volume we're seeing so far, it's unlikely that it's just gonna, break out and just continue going higher beyond 91.5. So the risk above 91.5 starts shifting back to the buy side. But right now, the immediate bias can be established based on 77 quarter to 79 quarter, and then how the market is shaping up in real time. If there is sufficient strength, then we could just continue balancing a bit and then break out and go to new highs. If we're seeing, clear-cut weakness here at 77 quarter, 79 quarter, and the AD is negative, trending lower, tick is holding below zero, then it's going to make it very difficult for ES to go higher. And at that point, we could be looking at a pullback to 71.5 to 73, and maybe even lower into the actual breakout area from Friday. So those are the main ideas heading into the open. We are going to give the benefit of the doubt to buyers as long as pre-market support is holding and as long as we're not seeing clear-cut signs showing weakness. So This is an inflection point in the market in the S&P. Russell is also at an important inflection point. So at this point, the question is whether the upside move from Friday is really going to sustain and whether we are actually going to get follow through today. So those are the main ideas. Let's see if the buy side can maintain control here at 77.25 to 79.25, and we'll take it from there.